Good day, everyone. Trust you're doing well today.
Today, we're talking about why banks and some investors are rushing into Treasury bills. Now, have you noticed something interesting lately? While a lot of people are busy talking about, stocks, equity mutual funds, and the next big investment, right? Many of Nigeria's biggest investors are quietly putting their money somewhere else. What's even amazing is banks are doing it, pension funds are doing it, companies with spare cash are doing it. Even everyday, ordinary Nigerians are joining in. So, what do they know that many people don't? Well, it all comes down to one number: 17.34%. That is the current top rate on Nigeria 1 year Treasury bill. But here is the real question: is this actually one of the best business opportunities in Nigeria right now? Or is there something people are not talking about? Well, let's break it down. First of all, what exactly is Treasury Bills? Now think of it this way. Imagine your friend needs money and asks to borrow 100,000 naira. They promise to pay you back in 1 year with some extra money as, thank you. A Treasury Bill works almost in the same way, except instead of lending money to your friend, you are actually lending money to the federal government of Nigeria. Now, the government needs money to run the country and manage its finances, so it borrows from investors for a short period of time. The Central Bank of Nigeria, also called CBN, organizes this Treasury Bills auction. But this is an important point that many people misunderstand. The CBN is not borrowing the money for itself, alright? It's actually managing the process for the federal government. That means when people say Treasury Bills are backed by the CBN, that is not completely correct. A better way to say it is that Treasury bills are backed by the federal government and issued through the central bank. Now let's talk about the big news. Between July this month and September 2026, the CBN plans to auction around 5.8 trillion worth of Treasury bills. That is a huge amount of money. In fact, about 4 trillion naira of that is expected to be in the 1 year Treasury bill. So you would ask, why is government offering so many Treasury bills right now? One reason is that it wants to raise money. Another reason is something called liquidity. Liquidity simply means how much money is moving around the economy. Now, when there is too much money chasing too few goods, prices can rise faster. That leads to inflation. Now, by selling Treasury bills, the government can pull some money out of the financial system, at least for a while. This is one of the ways the CBN tries to control inflation. Now, let's get back to that number, 17.34%. At first glance, that sounds amazing, but does it really mean your money is growing? The answer depends on one thing: inflation. Inflation simply means how fast the prices of everyday things like food, transport, rent, and electricity are going up. Now imagine your investment earns 17.34% in 1 year. That sounds great. But what if the cost of living also goes up by 20%? So even though you made money, your money can now buy less. That means you actually became poorer in terms of buying power. Now, here is where things get interesting. Nigeria's inflation has fallen a lot compared to the very high level we saw before. Recent figures put inflation at around 15.93%. So let's compare the two numbers. Your Treasury bills earns about 17.24%, right? Now, inflation is around 15.93%. The difference is about 1.4 percentage points. In simple terms, your investment is growing slightly faster than the cost of living. That is what investors call a positive real return. Real return simply means how much your money actually grows after removing the effect of inflation. This is one of the biggest reasons why Treasury bills are getting so much attention right now. But before you rush to invest, there is something very important you need to also know. Many people say Treasury bills are completely risk-free. That sounds nice, but it is not entirely true. Now let me explain. Treasury bills have extremely low default risk. Default risk simply means the chance that the borrower refuses or fails to pay you back. Now, because the federal government of Nigeria is behind the investment, that risk is considered very low. But low risk does not mean no risk, right? However, there are still a few things that can still affect your investment. For example, inflation could suddenly rise again. If inflation jumps above your investment return, your buying power starts falling. Another risk is if you need your money before the Treasury bill matures, you may have to sell it before 1 year is over. Now, the price you get depends on what is happening in the market at that time. And then there is another risk that many people never think about. Imagine you invest today at 17.34%. 6 months later, right, the government starts offering new treasury bills at 19%. Your investment is still earning 17.34%. You are not losing money. But if you had waited, you could have earned even more. In economics, this is called opportunity costs. Opportunity cost simply means giving up a better option because you already chose another one. On the other hand, if interest rates fall next year, then locking in today's higher rate becomes a very smart move. So, who is making the smarter decision? The person investing today or the person waiting? This is where strategy comes in. Think about the biggest players in the market. Big players like banks, pension funds, insurance companies, large businesses. These investors manage billions of naira. Their goal is not to become rich overnight, all right? Their goal is to protect money while earning a steady return. So right now, a one-year treasury bill paying around 17.34% with a low default risk looks very attractive to many of them. This is one reason recent treasury bills auction have received much more demand than the amount available. In other words, more people wanted to buy than the government was offering. That tells us something important. Large investors clearly see value at this interest rate. But does that automatically mean you should invest too? Not necessarily. Every investment decision depends on your own situation, all right? So if you need your money next month, locking it away for a year may not be the best choice, all right? If you're trying to grow wealth over many years, you may also want to compare treasury bills with other investments like stocks, bonds, mutual funds, or even your own business. There is no single investment that is perfect for everyone. The smartest investors do not ask, what is everyone else buying? Right? Rather, they ask, does this investment fit my own goals? That one question can save you from making expensive mistakes. So, what is the biggest lesson from everything we have discussed so far? Treasury bills are not exciting. They do not make headlines like, stock market or crypto. They do not move up and down every day like, the stock market. But sometimes the quiet investment like treasury bills are the ones that deserve the most attention. Right now, Nigeria is in a period where interest rates are high, inflation is sticky, and treasury bills are offering returns that are finally above inflation. If that trend continues, investors who lock in today's rate could protect or even grow their purchasing power. Of course, nothing in investing is guaranteed. Inflation number could change. Interest rate could change as well. The economy could change. This is why smart investing is not about chasing the highest number. It is about understanding what you are buying, knowing the risk, and making decisions based on facts instead of emotion. So before you make your next investment decision, ask yourself one simple question. Is your money working hard for you, or is it quietly losing value every single day? Sometimes asking the right question is more valuable than finding the fastest answer.
If you gain value from this video, please like and subscribe so you do not miss my next video. All right. Have a nice day. Bye.